So bonds are going to end up, they're gonna be in the liability section, right? So
Okay.
they are, we owe somebody their money back. Okay, tell me the different sections on the balance sheet of the liabilities. How do we break it down?
What, the current, the long term?
The current or long term? Okay, current is,
You'll be paid off in that year, or the fiscal year.
yeah, so due within a year. So if a bond is paid back within the next year, we put it here. If it's long-term, if it's not due within the next year, we just put it here. So it could be either place depending on when it's owed. I think that's all they're asking.
Okay.
So just look at the date. When it's due. Okay,
Premiums and discounts?
well, and then you could just say less. I don't think that's gonna come up, I can't imagine. Or you'd say add. There's not gonna be both, so it's just gonna be one or the other.
Lessing discounts for adding premiums.
Mhm.
Okay.
Yep. But there won't ever be both of them, so it's just one or the other. But I don't think that's even gonna come up, because I don't think you have to know discounts and premiums. Other than just when it is a discount and when it is a premium.
Okay.
Okay.
Be able to journalize the issue sell of bonds at face value.
Okay,
Parentheses at 100,
so,
which is face value. So are you gonna have to cancel tutoring sessions? Like next week, couple weeks?
next week, no. Finals week, it just kinda depends. I only got appointments through Wednesday right now, I think, but
Okay.
next week is just a normal week still for school, so.
Okay, good. Just wanted to make sure here.
Issue bonds. Okay. Let's say they did this, what day? We'll say 10-1. Okay. Help me journalize when they issue these bonds.
So according to cash, they decided to issue bond. They issued
Issue bond.
James Bond.
There we go.
They needs to go get their bonds for them.
Yeah.
They issued 1,000 at 100, 6% 5-year bonds at 100. What did you ask?
What's the journal entry for these bonds?
So, what is it, bonds issued? Is that even a journal entry?
Well, we're issuing the bonds, so now we want to know what goes into the journal entry when we issue the bonds.
Bonds payable?
Bonds payable, is that a debit or a credit?
That's a debit.
What's the payable?
Or is it cash and then bonds payable?
Yeah, so cash, because that's what we're getting.
Yeah.
That's our debit, because it's increasing. And then bonds payable, our liability or our debt is increasing.
Okay.
Okay, how much?
100.
Just 100?
Do we add the money in there to the 6% too?
We don't add the 6% in, because that's, but we sold 100 of these for $100.
1,000 does for $100. So you have to do 100 times 1,000.
Yeah, so we'll just add 2 more zeros, right? No, 3 more zeros. Yeah, 3 more zeros, sorry.
No worries.
Okay, $100,000.
So the 6% is a separate entry, isn't it?
Mm-hmm. Okay. Now, on 12-31, it's my year end for my company. I want you to accrue the interest on those bonds.
So it's 6 times 100,000.
So 6%
times 100,000
times 100,000,
times 1/5, right?
where's
In
1/5?
5 years.
5 years.
I guess we don't need to do that, do we?
No, because remember, we're looking at the dates.
Yeah.
10-1, it's the same as if it was like a
Oh,
note.
so it's 2 months,
3, right?
3 months.
10, 11, 12.
So it's 3/12. Okay, got it.
This 5 years just tells me in 5 years I'm gonna pay it all back.
Yeah, I don't have to worry about that.
Okay, so what's my journal entry on this date?
It's gonna be,
Let's see, was that 0.06?
can't even think of the name right now.
1,
Interest
2,
payable,
debit or credit?
that's a credit.
Credit. I'm gonna call it bond interest payable in case that shows up on your test.
Okay, bond interest payable.
Or it could just say interest pay. It could either just say that or have the bond in front of it. Either way, they're both right.
Interest expense
And then
for that number.
times whatever that number
Yeah.
is, right? Plug and chug in our calculator. Okay, now let's say they pay the interest every single year to people. I want you to, on 10-1 of the next year, I want you to pay the interest that you owe to. So they paid interest.
So it's that same journal entry.
This is to accrue interest, but now we're paying it. Now we're sending people their interest payments.
Oh, so it's swapped then.
Okay, so tell me what happens.
So the bond interest payable gets a debit
Bond interest payable
and.
for the 6% times 100,000
Yes.
times 3/12. Okay,
The 3/12?
well, that's what we had here,
Okay.
right?
Yeah.
Okay,
Then it's the bond interest expense.
so we're gonna have also bond interest expense, for how much? Because now it's been another 10 months, right?
Yeah.
Or 9 months, sorry. Because it's on the first, so January, February, March, April, May, June, July, August, September, October, November, minus November and October. Whatever, you know what I mean.
Okay, so that's the 10 months. 6% times 100,000 times 6 months.
So now we have a full year, right?
Yeah.
Okay.
And then it's cash
And then cash,
for both of those amounts.
both those added up, or the 6% times 100,000 times 12/12. Same thing, right? Add those two up. Okay,
Get those ones down for some reason.
all right. Now, really quick, pay off the bond. Let's say it's 5 years later, and we pay it off. Now, let's assume. Okay, let's assume we've already paid off all the interest that we owe. That's most often what you'll see with bonds. They paid off the interest and then they pay back the principal or the face value of the bonds.
So that's 5 years later.
Yeah.
So it's
Just pay off the bond.
so can you just use 10-1 1 year later 5 times?
Well, this is what you're gonna do this journal entry basically 5 times, right? Unless we don't do this part. Let's say it was just, we did on January 1st, then we just do.
So you couldn't times that by 5 down there.
If you times this by 5, that'll tell you how much interest you paid in total. But we're wanting to pay off the bond. How much do we owe people?
1,000.
We still owe them the 100,000, right?
Yeah.
Okay, because we already gave them all their interest. Now we just still owe them this amount.
So isn't it 100,000?
Uh-huh.
Just by itself?
So then all we do is we say bond payable. So now we're
100,000
100,000.
in cash.
Okay, so when we sell it, and then when we redeem it, if we've paid off all the interest. If we haven't paid off all the interest, then we'll just take this part and include it in here as well. We'll just add any interest here. So if we had to make one more interest payment, let's say, all we'd say is interest expense. Maybe there's an interest payable, I don't know if we accrued it somewhere. We just add those amounts in here. Whoops, up here. Add add those in up here, and then add that amount to.
So
Just like a
what's
note.
that for again?
That's when we're paying it off if we haven't paid off all the interest. Do
Okay,
you remember when we made notes? We paid off a loan,
okay,
the exact same thing. Again and again. But we're just changing it from note to bond. But the
okay,
it's the exact same thing. What did we do when we had a note? We did that. This is all of us.
gotcha.
It's the exact same as a note, but at the end, normally we've paid off all the interest to begin with. Oops, gotta get rid of that plus there. So that's all we do normally. But if they say you have one more interest payment and you're paying it back, just do it like you would a note.
Okay,
Just put the extra expense in with it, add it to the cash, and you're good to go.
gotcha.
Okay? What questions do you have about these?
Nothing.
Feel good?
No?
Feel alright?
Yeah,
Feel like they could trick you on it?
probably.
Probably, so what are
Probably
we,
will.
what are we going to do then to fix it? We're gonna say whatever the question is. I didn't ask a question, I just told you what the question was. So then here's the question, we're gonna read that first, and then only take the information we need from above.
Okay.
That's gonna help us, that's gonna cut down our trickability. So, the chance that we make a mistake goes way up if we just start making calculations before we know what the question is asking us.
Gotcha.